What's up everyone, it's Scotty with Money Investing. In this video, we are going to be talking about Taiwan Semiconductor Manufacturing Company, or TSMC, or ticker symbol TSM as it's known, listed on the New York Stock Exchange. Hope you guys are doing great. They did report earnings, a beat on EPS, miss on revenue, very, I would say, okay-ish guidance from the company for the second quarter 23. And right now, the stock price is pulling back a little bit over 1.4% pre-market, trading just at $88 per share. So we're going to break down the revenue, the cash flows, the balance sheet, the valuation. We're going to talk about all of it. Hope you guys enjoyed this video, find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, the link to our Discord and Patreon is going to be down below if you're interested in joining us. And there is still that 16% annual discount available till the end of this month. And after that, the early bird investor tier and the discount goes away for good. So link's going to be down below. Now, TSMC first quarter profit inches past estimates, but growth seen as slowing down. So EPS did come in better than expectations. So net income did rise 2.1% to 206.99 billion Taiwan dollars. So $1 is 30 Taiwanese dollars. And the company said in the press release on Thursday, the figure was higher than Reuters' estimate profit of 192.5 billion. And net sales also grew 3.6% to 508.6 billion Taiwan dollars, which was at the bottom end of a January forecast range. Now, they also logged earnings per share of 798 Taiwanese dollars, more than the prior year's reading of 782. However, I'm looking at these numbers over here, which does suggest that the number was slightly higher on a year-over-year basis, but dramatically lower on a quarter-over-quarter basis, and net revenues did decline pretty substantially on a quarter-over-quarter basis. Year-over-year, they did also come down because of the foreign exchange issue. So based on the Taiwanese dollar, it was higher from 491 to 508 billion Taiwanese dollar, but if you convert that back to US dollars, from 17.5 billion, it was down a little bit to 16.7 billion. So down over 4.8% when you compare the foreign exchange adjusted, right? So that's really what the problem was an average exchange rate. US to NDT was 30.42 in their first quarter 23, and the guidance was 30.7. So of course, foreign exchange is going to play a significant role. But when it comes to the guidance, TSMC flagged slowing demand in its fourth quarter results in January and said it would cut its capital spending in 2023 to between 32 and 36 billion US dollars. And TSMC expects a slowdown in demand through the first half of 2023, but demand could pick up at a quick pace in the latter half of the year, especially as more companies move into using artificial intelligence, which requires a large amounts of computer infrastructure. So the firm, which is a major supplier to technology giants including Apple, Nvidia, Advanced Micro Devices, makes the most advanced semiconductor chips in the world and is also Asia's most valuable company. So without a doubt, it is very, very important for TSMC to, of course, provide us with some guidance, because that's really what's going to give us an insight into how the other manufacturers and designers for integrated circuits and chips are doing. Investors are somewhat soured towards TSMC due to political risks, and that's one of the reasons why I have really not taken a stab at TSMC's, because of the geopolitical risks between Taiwan and China. And this has also been a TSMC attempt to move production outside the island state, which plans for a $40 billion factory in Arizona. Warren Buffett had also bought $4.1 billion worth of TSMC shares between July and September last year, but it had offloaded over 86% of the stake by end of 2022, citing concerns over souring relations between China and Taiwan as well. So geopolitical tensions definitely a big key component there in a TSMC. Now, operating margins were 45.5%, which was lower quarter over quarter and also down year over year. When it comes to net profit margins, they were also lower on a year over year basis, down to 40.7%, down from same time last year, and of course last quarter as well, so down pretty substantially there. And of course, we got the revenue also declining on a US dollar currency basis. Now, this right here was the first quarter revenue by platform, or by different segments, if you were to call it. We got HPC, high performance computer, down 14% quarter over quarter. Smartphones down 27%. Internet of Things down 19%. Digital consumer electronics down 5%, and we got Other revenue down 18% quarter over quarter. The only bright spot really was automotive, and that's really a small piece of many manufacturers' business, right? Consider Nvidia, AMD. I mean, automotive is a really small piece. Most of it is data center, high performance computing, and of course, we got smartphones, IoT, all those things for Qualcomm and some of the other companies as well. So a lot of them did decline. This is, again, giving us a little bit of an insight into what those companies are going to report. And in my opinion, I think the first quarter 23 may be challenging still for semiconductors, especially after they've moved up so much so fast. I did analysis on SMH, and we talked about the overall chart where it has moved up, and it's going to be quite interesting where we go from here, considering that we are also approaching some level of resistance here at 273, right? So we talked about 273, this right here being a very important area of resistance, and also trading inside this higher high and higher low. So been consistently trading inside this uptrending channel, where every time it comes down to that higher low, that ascending support, that green line gets bought up, validates and pushes back up, and every time, of course, we get up to that red line, which is the higher high or that resistance, we get rejected and get sold right back down. And right now I can make an argument that, well, not right now, but in the past, I can make an argument that this right here could be considered as an overvalued level for SMH or for semiconductors and chips on an aggregate basis. And right now, of course, we did sell off here. We validated that higher low, and we're once again moving back up to that resistance for us to watch at 273 to as much as 315. So this right here, this red rectangle, is going to be an important area of resistance to watch for semiconductors, for SMH in more specifically. Now, in terms of cash and marketable securities, they're still sitting at 1.5 billion Taiwanese dollars, and long-term interest-bearing debts 854 billion. So total liabilities 1.9 billion, and we got total assets sitting at over 5 billion. So balance sheet, once again, very, very good, fantastic balance sheet. And this is the guidance: revenue between US dollars 15.2 billion to 16 billion dollars, and gross profit margins between 52 and 54%, which are going to increase, or actually it's just going to go down from 56%. So we are expecting lower gross margins from the company in the second quarter as well. So right now, I mean, in my opinion, the valuations are a little too high, not for TSMC specifically, but for other semiconductor stocks, other chip stocks, more specifically Nvidia, and I would even argue AMD is a little bit on the higher end, considering that growth prospects are starting to slow down a little bit. But TSMC, the valuation still, I would say, reasonable at 13 times earnings and 6 times sales and about 8 times cash flow. But the real problem and the concern remains the geopolitical tensions between China and Taiwan as well. So support level is going to stay put somewhere around $85, $86. So this right here is going to be that level to watch. Right now, we're still consolidating sideways. Pre-market's down about 1.5%, but that right there is going to be that support. Resistance is going to stay put at 104 for TSMC, and we obviously did get a little bit of a breakout from this inverse head and shoulders for the company as well. So my fair value doesn't change from my previous video. I did an analysis. Make sure that you do check that out, but technical support at $86, and I would be a lot more interested in a swing trade on TSMC at close to $59, $60 per share. So that right there is going to be that level to watch that I would be paying attention to for a potential swing trade on TSMC. But of course, that geopolitical tension is going to keep me away from investing in the company over the long term, unfortunately, because that's very unpredictable and those are very binary events. Whatever happens, of course, the stock can move wildly higher or lower. So that's not the type of risk that I'm comfortable taking. So I hope you guys enjoyed this video. Let me know your thoughts on the in the comment section below. Are you buying, selling, holding? What are your thoughts on TSMC? But this does give us a little bit more insight into the forecasted revenue earnings for Nvidia, AMD, Apple, even the likes of Qualcomm, MediaTek, some of these companies that are going to be reporting that are in the semiconductor chip space. And the guidance is not super great, and they are flagging some concerns in the first half of 23. And as I pointed out, SMH approaching that resistance at 273, 311 is going to be some resistance levels to watch. So I hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, link to our Discord, Patreon down below. 16% annual discount available till the end of this month. As always, happy investing. I'll see you all in the next video.